Good morning and welcome to today's webinar on investing in international property, the latest in our ongoing series. Today we'll be unpacking Birmingham as an investment destination. My name is Scott Bell, General Manager Gauteng for Carrick Wealth. With me I have Craig Warwick, Regional Business Development Manager South Africa from SevenCapital. He'll be unpacking this exciting opportunity. We'd love to hear from you and welcome questions asked via the portal. We will do our best to answer these questions within the allocated time. Morning, Craig. Over to you.
Thank you, Scott. Morning, everybody. Very excited to be joining the Carrick team this morning and chatting about some of our opportunities and obviously the market as a whole within the Birmingham and West Midlands area. Just to give you an overview of what we'll be covering this morning. A place of culture, looking at the cultural aspects and elements in Birmingham as a city, past performance of the city itself, as far as commercial drivers and obviously property development and property growth. Second city future predictions. Birmingham literally has been pegged as the second city of the UK behind London. Investment snapshot, so we'll look at one of the completed developments in the city in the main financial district, 105 Broad Street, just as an example. And then why SevenCapital, just covering the overall kind of the service offering from our side and how we're structured and why we're structured that way and how it speaks into the investment security for the individuals. And then we'll do a panel Q&A at the end. As we go through, please feel free to post your questions in the bar below, and then we will tackle those at the end of the presentation. So just looking at the cultural elements of Birmingham, there's a massive drive well underway called the Big City Plan. It's a regeneration plan, £8 billion of regeneration taking place across various sectors, commercial, leisure, and then obviously residential, based on the demand coming through from the commercial growth within the city. When you go there now, there are massive amounts of really attractive options in terms of lifestyle, pubs, restaurants, libraries, theatres. Just there's a hive of activity going on in the inner city, and that's attracting the younger generation to move into the city because there's everything on the doorstep in terms of lifestyle and opportunities, obviously, within the commercial space. So just looking at the city as a whole and why it's thriving, Birmingham currently is forecasted to have the strongest house price growth over the next 5 years compared to the whole of the UK. That's according to JLL, the professionals on the ground. You got the 2022 Commonwealth Games coming through, largest sporting event since the Olympics in 2012. That's estimated to bring in just under £1 billion, £750 million injection into the economy. So that's a massive, massive driver. According to sources on the ground, anything within a 10 to 15 minute walk away from the new HS2 high-speed rail system that's coming through in the next couple of years, any properties in that proximity, they're pegging around 30 to 60% growth in property prices. So there's a massive opportunity right now, specifically in areas like Digbeth. If you look at the map on the right-hand side, HS2 main terminal will be in Digbeth. There's a lot of development coming through from our side over the next couple of years there. And it really is a case of getting in now to enjoy that massive anticipated growth in a couple of years' time once HS2 is fully operational. Excuse me. 40% of final year students studying in Birmingham intend to stay. So there's a massive retention rate on young professionals coming into the market, coming from all over the UK, studying at the 5 universities in Birmingham, and then staying on 40 to 50% retention coming into the market. So that's another driver, increasing that demand for good, high quality buy-to-let apartments and accommodation. Across the city, part of that £8 billion regeneration scheme, there's a massive amount of renewal taking place. You can see it already when you're in the city. Smithfield, for example, is going to be next to Digbeth. That is going to be a massive mixed-use development, over £1 billion. So residential, leisure, some commercial, and that's already underway. So you can see the face of the city changing. And then it's the largest city economy in the UK outside of London. Literally, as I said before, it is the second city of the UK. There's a couple of reasons for that. Predominantly location. It is smack bang in the middle of the UK, giving distribution companies the edge in terms of distribution of goods across the UK. And it's going to be enhanced further when HS2 comes through, the high-speed rail, which will give you connectivity into London within 40 minutes, where it's currently a 2-hour, close to a 2-hour rail. So that is going to open it up dramatically and give it commutability into London as well. So looking at the past performance of Birmingham, very resilient city. It appears to be significantly more robust than other parts of the UK when you look at the economic growth within the city itself, comparing to other areas across the UK, north and south. Price growth, property price growth has been resilient. Average values are 60% higher, outperforming regional and national growth rates of around 12 and 9, and that's across the entire UK. So it's well above average in terms of property growth. Over the long term, the prices are 52% higher than post-crisis trough in 2009, sorry. And it's the most populous city in 2018, most popular city for those looking to move out of London into other cities where there's a lot of opportunity. Streaks ahead of Manchester, Leeds, Bristol, etc. So you can see there's this natural migration of guys moving out of the capital, either onto the commuter belt or to cities like Birmingham, where there's this boom of commercial activity, commercial growth opportunities, and it's just everything's just playing perfectly into the investment case as a whole. Looking at the predictions for the city going ahead, it's a growing city. As I said, 32% of Birmingham's population is aged under 25, making it one of the youngest cities in Europe. There's this, they call it generation rent. Back in the day, our parents always kind of told us, and the UK citizens' parents always told them, you know, don't rent, buy, it's lost money if you're renting property. That's changed dramatically now. The younger generation coming through want to rent for a number of reasons, some of them obstacles in terms of raising deposits, etc. But there's this massive culture of wanting to live in the inner city, like in Birmingham, and wanting to rent rather than purchase. And that in itself is building the investment case for offshore and local investors wanting to get into the buy-to-let space. It's a connected city. People are willing to pay more for properties with great connectivity. There's a massive metro system upgrade well underway in the city, taking you from one side of the city to the other within a matter of minutes. And then probably the biggest driver, as I said, in the next kind of 5 to 7 year landscape is the HS2 effect, that high-speed rail system that's coming through connecting it to London. Net zero city, so Birmingham, part of their council plan and their vision for the city is to be a leading city within the UK in terms of tackling climate change. Everything they're doing, all the building approval, all the commercial, the residential, the leisure, the infrastructure upgrades, the rail systems, etc., are all built and planned with that green mindset. So there's a lot going on in terms of the development of the city and obviously where it's going and what direction. Looking at Birmingham over the next 5 years, we've spoken about it, HS2 high-speed rail and the 2022 Commonwealth Games, massive catalyst drivers for growth in Birmingham. It's the fastest growing city in England, with a population set to reach by 2030, reach just over 1,240,000. And again, the majority of that are young professionals coming into the city, coming out of those universities. So there's a massive amount of commercial activity. Birmingham needs a further 2,500 homes to meet incredible demand across the UK. I'm sure everybody knows there's a massive housing shortage, and even more so in areas and cities like Birmingham where there's this boom of commercial activity. For an investor, perfect landscape. Obviously, you want that factor of undersupply over demand, very high demand, and that's exactly what you see in a city like this. So it'll give you less voids, stronger growth, property price growth, as you see there, and then obviously rental price growth. Expected to increase on the property price side close to 20% over the next 5 years on average in Birmingham. And then rental prices, very importantly, and a massive part of the investment case as a whole, obviously, are set to increase by almost 16% over the next 4 years. Just looking at the city as a whole and the proximity of the example that we're going to use today, 105 Broad Street. If you look to the right, these are massive, massive organizations, HSBC, PwC, Deutsche Bank, Lloyds Bank, all headquartered now in Birmingham. So it's fast becoming the financial district for the UK. And that's a massive amount of opportunity for these guys coming through from the various universities. Excuse me. Government's aiming to stimulate the economic growth of the Midlands, creating 300,000 new jobs over the next 15 years. The future city plan will stimulate Birmingham specifically. So there's a massive focus by government on the West Midlands and specifically in Birmingham itself. UK's second biggest business hub outside of London. So as you can see on the right, these are huge, huge firms that have chosen to headquarter from London, for example, into Birmingham with the future in mind in terms of the connectivity with HS2 and obviously the location and proximity to the rest of the UK as far as service distribution goes and goods distribution. From a connectivity perspective, probably one of the most important drivers when you're looking to invest in an area in the UK. Currently, Grand Central Station, brand new build, amazing station in the heart of Birmingham, taking you to London in 96 minutes. That is going to change dramatically when HS2, the high-speed rail, comes in, as I said before, 40 minutes into the heart of London when HS2 is operational. And then obviously the proximity to the rest of the UK, the M6, the M5, it's a matter of minutes and you're on these major highways connecting you to the rest of the UK. So 105 Broad Street, as I said, completed development. This is within walking distance from the main financial district, the business hub, PwC, Deutsche Bank. You can literally see them from the development. Completed, fully furnished, tenanted. It's a pre-let option, so there's no risk of voids from the outset. 2 beds available in this, and they're nice large 2-bed apartments. As I said, prime city centre, HSBC, PwC, Arena Central on the doorstep, literally within walking distance. As far as the amenities go, state-of-the-art private gym, 24-hour concierge, car park, private car parking available. And I'm sure, as you guys know, parking is a major issue in the UK, and that just gives this type of development the upper hand in the market that's growing. Every apartment is fully kitted out, modern fitting and fixtures. And as I said before, for the most part, you're buying it as a going concern or going investment with the furnishings and the tenant already in place. So there's no risk of any voids. Price-wise, as a range or an example, 2 beds from around £250,000. Deposits would start at around £24,000. And this is completed. So it's your instant returns on all the capital deployed. So just having a look at SevenCapital. Sorry, before I go there, this example of a development is to give you an idea of the locations, the proximities to the commercial spaces, which is highly important. The connectivity, the metro line, for example, metro links are right outside the doorstep of this development. It's on a main carry. So there's a lot of stock coming through the next 12 months. We'll be releasing a lot of big off-plan developments in the city centre in important areas like 105 Broad Street, like Digbeth, where there's a lot of commercial activity and growth going on, and on the doorstep of that HS2 system. So this is really to showcase the city and the investment case as a whole. And then post this webinar, we will obviously have successive webinars where we actually have brand new opportunities that you guys can look at within the off-plan space in the city itself. So looking at why SevenCapital, why partner with SevenCapital as a developer and a supplier. In terms of the bigger group, at this stage around a £6 billion company value as a group. 7 media, 7 events are our marketing arms, 7 homes, direct kind of residential home, retail, build and own a lot of retail malls. 7 industrial is obviously our industrial arm where we build the large warehouses, distribution centres across the UK. And then probably the most important takeaway from the slide is coal mill tank construction. So as SevenCapital, as a group, we own our own construction firm called Coal Mill Tank. What this gives us and our clients is peace of mind that the build quality is on point, first off, and that the timelines are adhered to and they don't slide. So we're able to fully manage the entire process from planning all the way through to final product within the group. Synergy Bank, ex-Bank of Cyprus, we bought it a few years ago with a loan book of around £1.5 billion. That's grown to close to £3 billion over the last 2 years. And then the Park Regis is our global hotel chain, 48 hotels, 4-star hotels around the world. And Staywell is our hospitality group that manages the Park Regis Group hotels. Looking at the buy-to-let division and space within the business, to date we've delivered over £2 billion worth of property to our clients. 130 dedicated property professionals in our global offices, and it's important to point out there, I would say 40 to 50% of those professionals, property professionals, are customer-centric, client-facing, client-assisting support staff. So every step of the way, you are fully looked after. All the information flow, everything is on point, and that's kind of our route to market with our clients. Close to 8 million square feet delivered so far, and over 6,500 residential units completed and delivered to clients. "29 developments completed so far." Now, the names obviously wouldn't mean much to anybody, but again, the takeaway and the important point to note on the slide is, as a developer, we have completed on every single project that we've set out to complete. So we've got a 100% track record, and that's probably one of the most important things to look for, specifically when you're an offshore investor looking into the UK. What is the track record for this developer? Is it a developer, and are you buying directly from the source? And obviously the most important thing is, do they complete? What is the build quality on the back end? And is it on time? And that's something that we successfully manage as a business, as I said in the previous slide. Just to visualize, the slide really just gives you a sense of the design elements of some of our completed developments. Ultra modern, always standing out, landmark sites, and that kind of points to the ultimate win in an investment like this, which is attracting the right profile tenant and retaining that tenant. And every single development we have runs at between 90 and 95% occupancy at any given time, which is incredibly high, and that's what you're looking for in terms of the stability of your investment. Currently under construction, 8 developments currently under construction at this point. As I said before, Birmingham is a massive growth region for us. We're headquartered there, and you're going to see over the next 12 months a lot of prime stock, off-plan stock being launched through Carrick and our relationship in Birmingham as a city. So there's going to be a lot of opportunity to get in at ground level as early as possible, cherry pick the apartments that you know are going to be the most appealing. And there's going to be a lot of options that you can look at with different timelines, and that allows you the flexibility. If you're looking at a portfolio, we can then map that out and build a portfolio over time and stagger it over time. So the company as a whole, as I said before, you're buying directly from the source, directly from the developer, which is a very important point to note. We've structured the business as a full turnkey investment solution. We're a turnkey developer. So what that means is we've got obviously the development itself, which we build and you're buying directly from the source. Then we've got a panel of solicitors in the UK on the ground that would assist you as a client with the transactional side of things. We've got our partners, Visionary Finance, so it's not necessarily just a cash investment. We can arrange a mortgage for you. On that note, mortgage rates at this stage range from around 50% mortgage up to about 75% for SA investors. Rates of around 3.5% on average. So it really makes the investment tick over. And we do a lot of modeling for you when we meet with you to show you all the associated costs, and then obviously your net effect and return on capital employed. So we do all of that modeling for you so you know exactly where you're sitting on the financial side, on the gearing side. Then we've got our internal furnishings department. So as soon as it's complete, we can fully furnish the apartment for you, get it ready to rent. And then probably the most important element are our partner letting agents on the back end. So once it's complete, furnished, we will find the tenant for you, vet the tenant, put the lease in place, and then manage it for you ongoing. So it's as hands-off as you could possibly want and need investing from South Africa in a foreign market. Important to note, very proud element for us. Every year, as I said before, over 40% of our staff complement are customer-facing, customer service orientated, and every year, year on year, we win awards for that service, and obviously that's a proud element for us. In terms of our global offices, as you can see, head office in Birmingham, London, Switzerland, Dubai, India, China, Hong Kong, Singapore, and then obviously the office in South Africa, in Johannesburg. So we're on the ground, same timelines, no language barriers, etc., and can meet face to face. You've got a point person every step of the way to assist you on the ground in South Africa. Thank you very much.
Fantastic, Craig. Thanks very much. So just to bring through some of the questions that have come through. So the first question was, where do you see the Birmingham property market, both in the short and long term?
Okay, for looking at it in the short term, there's current under delivery in terms of new build to feed the current demand in the city. There's a massive amount of influx coming through. As I said before, you've got these students coming through, 40% retention rate from the 5 universities, so there's a market there. And you've got all these big headquarters, these big firms, financial institutions, for example, moving their headquarters into the city. So there's a huge undersupply. And all that's pointing to, all that's creating is really high occupancy rates, really high demand for properties like our developments, and quick turnaround in terms of replacement tenants as well. So clients can have peace of mind that they're not going to sit with long periods of voids and having to cover costs, converting rands to pounds, etc., etc. So that's the short term. In the long term, like anything, you know, we would develop and build based on current requirements and forecasted projections in terms of growth and tenant demand. That will eventually hit, like anything in 10, 15 years, that would hit a ceiling, and then it would kind of subside, and then it goes on another growth trend. It's a natural thing that happens in that market. In the long term, the biggest driver, I would say, is the high-speed rail. That is going to unlock unknown potential in terms of connectivity to London, connectivity to the commuter belt as a whole. And I think you're going to see a massive influx of more commercial activity, bigger businesses coming into the city, and then commuting into London as and when needed, and to Heathrow. So I think in 6, 7, 10 years' time, you're going to see a massive amount of cap appreciation, good tenant demand, solid tenant demand, and high rental yield growth.
Brilliant. Just a question around managing a property that is you can't really go and visit. So you know, as South Africans, we love property, but we also like to be able to go and make sure that it's being looked after, etc. Now it's removed and you've got it in another country, in another hemisphere, etc. How can investors go about making sure that their property is looked after, that tenants are managed, etc.? Okay.
So first off, before the client even purchases, there's obviously a lot of restrictions with travel, etc. right now. We've gone the route of on completion doing completed live video walkthroughs of each and every apartment. So not only can we show the client the floor plans, we can now show them a physical walkthrough, virtual viewing, call it, but a physical walkthrough on the actual apartment, which can give them a sense of what they're purchasing first off. And then going into the security of the investment, the partner letting agents on our side, they would essentially engage with the client, work on the client's behalf. As I said, find the tenant, put the lease in place, and then manage it for them ongoing. That management includes quarterly checks, inbound, outbound checks, snags, etc., and full maintenance management as well. So if there's a scuff on the floor, they will get hold of the owner and say, listen, this is a situation, it's for the tenant, it's for your account, whatever the case may be, and then handle it for you on the ground that side. And that's part of the service offering. Everything down to rental collections, paying the rentals into your receiving account.
Brilliant. And then where a client wants to, or an investor now wants to sell the property, you know, they've maybe held it for 5 years or 8 years, and they now want to exit it. Would they come back to you, or would they then have to try and seek an agent in Birmingham?
So from our side, we would be able to assist with that. We partner with all the sales and letting agents in Birmingham and across all our regions that we develop in. So we could definitely assist with that if the client wants to sell off a apartment or a portfolio over time. On that, I just wanted to point out, you spoke about the 5 to 8 year, which is pretty much spot on. The idea with this type of investment, just to put it on record, isn't necessarily a flip investment, a flip product, because of the associated transactional costs up front, the stamp duties and all those good things. You need to be comfortable to hold the property from a 5, 10, 15-year period, and then you really will see great rewards. On average, every 10 to 15 years, property values in the UK double. So that's what you could look forward to. So it definitely is a ideal kind of approach to hold the property for as long as possible.
I think, Craig, just the last question that's come through. In your experience, South African investors that are buying property in the UK, are they typically holding it purely as an investment, or are you seeing them holding it for a period and then, you know, maybe their children or themselves are moving into them at a later point?
Yeah, very much so. A lot of the investors in South Africa buy with a future view, a long-term view, and exactly that in some cases. You know, pure investment right now, get a pound-based return, build up a little bit of a nest egg that side, get all the good cap appreciation, the doubling in values, and all of those good things. And then potentially, especially in cities like Birmingham, you got 5 universities. You got the Queen Elizabeth Hospital, 50,000 medical staff. There's a massive amount of opportunity for kids going over to obviously then study in the UK and potentially stay on. So a lot of the guys do have that in mind. Let's get an investment going for 5 years, and you know, when our children need to go over and study, it's there, or for own use and down the line. Yeah.
Brilliant, Craig. Thanks very much for this educational take on Birmingham. It doesn't look like there's any more questions that have come through. So on behalf of Carrick, thank you to you and SevenCapital for taking the time this morning to join us. To those on the line, thank you so much for staying with us. We do hope that you found it beneficial. There is an opportunity after this to still send through questions that you may have to either Craig or myself. You have our details below. And yes, thank you very much for joining us, and enjoy the rest of the week. Hopefully load shedding won't affect you too badly. But from us, thanks very much.
Thank you, everybody. Thanks, Scott.
Okay, bye.